Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 3rd of March. Starting off with the FTSE 100, where the prediction was that we would hit 9,000, or we could hit 9,000 by the end of this month, and it looks as though we might actually be ahead of schedule on that, or is it schedule? We've got the market above 88.20, the old February high, which we've done on the first session of this month, which is pretty impressive, so that does suggest that 9,000 plus is on its way. And we're looking for that while we're above the old target area, or old target line, 87.50. The latest move predicted by a rebound for the RSI above neutral 50, and only back below 87.50 takes us back down to the uptrend line from back in January, 86.50. But at the moment, it looks as though we're going to get our breakout and our move to 9,000. Hopefully, some of the joy will filter through to the small caps eventually. Moving on to the DAX, which managed to negotiate all the political turmoil in Germany and bounce basically at the last gap there, 22,200, and above the floor of the rising trend channel there from November. Top of the channel there, 23,300, and we're looking for that by the end of this month, or hopefully a bit sooner. RSI bouncing basically above the 60 level, so this looks pretty well entrenched in terms of its uptrend. Moving on to the Dow, which has been the weaker link out of the big three here, and looking for this market to hopefully make progress through recent resistance, 43,900. The obvious target now is a retest of the 45,000 record highs as we wait for the RSI to break above neutral 50, but hopefully now the risk of a break of the rising trend channel there from last March and 43,000 is now diminished. Moving along to the market of the moment, which is Bitcoin, which had the hack sell-off that we had at the end of last month, or basically last week, and then has had the benefit of the long-awaited US strategic crypto reserve news, and here we're back in the old range, basically 90,000 to 109, the peak that we had, and also basically back within a rising trend channel there based at 80,000, just below the rising 200-day line. So it was a bear trap rebound from below the 200-day line, and what we'd like to see now basically is lots of end-of-day closes back above the 90,000 level to celebrate the strategic reserve the US has just announced. It would be nice to see the RSI close above neutral 50 today, and also nice to see an end-of-day close through the 50-day line, hopefully in the next few sessions, to then get us back on track for a move to the top of the rising trend channel from this time last year, currently heading towards the $115,000 area. This stage, only another end-of-day close or closes below the 80,000 level will really suggest that this is indeed a market going into a bear phase. There was a bit of a rug pull for gold last week, which is of some concern because we broke back below 28.75, the neckline support there. That leaves us with a chance of retesting the 2800 level, or maybe down to the 50-day line, 2790, before this market can recover. But at the moment, that looks like the worst we might get. In fact, this might already have been the worst we can get. RSI on the wrong side of neutral 50 or 45, so if you are a buyer into the dip, you might want to see that back above 50 before taking the plunge, or an end-of-day close back above 28.75. Moving on to the stocks, and a company which has been saved by Trump's action regarding cryptos is called Argo Blockchain. It's also saved by its latest funding news, which presumably most people weren't expecting, especially the bears. Current situation is that we've had a bear trap island reversal, so gapping down last week and gapping up today. Looking for this market to at least head back towards the top of this broadening triangle base at 6 pence, even if we then fail again after that. And if you're cautious, you wait for an end-of-day close above the 50-day line at current levels, 4.25 pence, before assuming 6 pence was on its way. BAE Systems, a stock which I highlighted a while back. I think, unfortunately, there was a little bit of a rug pull ahead of the the move that we've seen just now. But what's interesting here is that we had the gap higher. We then bounced off the floor of the gap there around £12.50 and then pushed up again. But the current situation is that we've hit the target we were looking for, £15.20, and nearly hit the big target here, which is up to £16.80. Let's see if BAE Systems can celebrate the warmongering that we have all over the place at the moment with a move to £16.80. The other point to note is that we've got the 50 and 200-day lines both rising. That means that we've got a golden cross hopefully sometime later in this month, and obviously that tends to be the strongest part in the cycle, the run-up to a golden cross. The rally here started with a RSI 50 rebound, but obviously that gave us that bit of a bear trap and gap fill that we had. Decent interest in Blencowe, probably something which will deliver the bounce off the recent lows towards 3 3/4 pence. We've got the price channel floor here as well, and above 3 3/4, looking for the shares to basically head to the top of the range, 5 1/4 pence plus, hopefully by the end of next month, or this month in fact, while we remain above the August price channel floor. Very pleased with the next stock, Great Southern Copper, and expecting lots of messages of congratulation, which is something which I never get actually, but a decent mixture of both the technicals and the fundamentals. I spoke to the company on Friday. We already had an unfilled gap to the upside on the 25th or the 26th of February, and the shares are built on that. The initial target here was up to 3.1, 3.2 pence. Above that, we're now looking for as high as 4.5 pence by the end of this month. And if you're really optimistic, you might actually be looking for that line there towards 6 pence, but let's not get too excited at this stage. 4.5 pence while we're above 3.1 should do the trick, and you can see that both the 50 and 200-day lines are rising. And we've had several days of bullish candles. Moving along to stock which can be rather volatile, GS Technologies, but we bounced off the floor of the rising trend channel there from September, broken above neutral 50 on the RSI, and looking for the shares to hit that mid-channel line there at 2.8 pence by the end of this month, while they're above the initial February resistance around 1.8 pence. First news from Helium 1, first news from Africa from Helium 1 today for the first time in many months. Back in September, we just missed the top of that rising trend channel, which is around 1 1/4 pence. And ideally, what we'd like to see now is that the shares close above the 200-day line there at 1.05 pence and head back to 1 1/4 pence as a near-term target. But we have had decent bear trap rebound from below the 50-day moving average and also below the 1 pence zone. Next up is Panthera, where it looks as though people are on the edge of their seats waiting for some news on the Indian litigation, a massive one as well. Could double, triple, etc. the share price. The shares were already identified as heading towards 12 1/4 pence, the top of that rising trend channel from back in the summer of 2023. That looks like it's on its way while we're above 9 pence recent resistance, and also nice to see the shares gap up. We're gapping up also after the company raised money recently as well, so raised 2.8 million last week to help its Indian claim, as you can see there. So looks as though finally, after a lot of consolidation between 4 pence and 8 pence, the shares are on their way. If you're a fan of the stock and looking for greater glory, you can see that the next level up after sort of the 12 pence zone would be towards the 18 pence zone. Moving along to the last three. First one is Pantheon, which is a drill baby drill situation. Here the shares strong enough to bounce above the floor of the rising trend channel there, around 55 pence, and a strong start today with flow test news. Here we've got the top of the channel there as high as 80 pence, which we're looking for by the end of this month, certainly while we're on the right side of 60 pence. On to QinetiQ Group, which is another charting win in the sense that we had a bear trap island reversal, so gapping down back in January and gapping up twice last month. Current situation is that we've hit our target there around £4.40, above £4.40, and the 200-day line looking for the next level up as high as £5 by the end of this month. So if you're looking for a stop loss, it probably would be the resistance on the way down around £4.24. Finishing off with Tiger, and here I didn't really want to look at this, but we do actually, in theory, have a bear trap gap reversal. So breaking the December support there at 0.1 pence, and then gapping up back above that today. That suggests, I suppose, we could get up to 0.14 or 0.15 by the end of this month, as long as we stay with that gap unfilled. That's it for me today. More updates tomorrow.